Guys, this is S&P 500 weekly technical analysis for the week of April 10th, 2023. That is from April 10th, Monday to April 14th, Friday. So last week we were expecting this, the profit booking in the entire stock market in all of the indices, and that we have noticed on Monday that on Monday it was there in the first half, but in the second half the profit booking it was aborted. And also you need to understand that this the previous week it was driven by the Dow Jones. It was not the S&P 500 that was on the driving seat, but it was the Dow Jones that was driving the entire stock market. So the profit booking that we were expecting in the S&P 500, it was supposed to come through the Dow Jones. So on Monday, the Dow Jones, it fulfilled all of the conditions that were supposed to be there for the profit booking. And the only problem because of which S&P 500 failed to see this, the profit booking, it was the open. The open of the S&P 500, it was below the previous close. And that is exactly what I mentioned in my previous S&P 500 technical analysis, that if there comes an open, any open that is below the previous closing price, in that case, we might not see the profit booking. Because for the profit booking to happen, there must either there must be a flat open or there must be a gap up open, right? And that was the condition that we have seen here in case of the Dow Jones. Because on this particular day, the entire stock market on Monday, because of the formation of the green candle, the entire stock market was saturated, heavily saturated. This means that on Tuesday, a fall was almost confirmed, almost 99.9%. And the same thing I mentioned in my final update to my YouTube community members on Monday, that closing of the Dow Jones above 33,275 means Dow Jones is trading at super saturated levels with a very little room to move up any further. They have to book the profits in order to cool down the technical indicators. Because of the heavily saturated technicals, the entire stock market, it came down on Tuesday. And but they will not let it come down so heavily that it can trigger a bearish trend, right? And you will be surprised that on Tuesday the closing was at 4100. Why it matters? 4100. It matters because on Monday the low of the candle was 4098 or 4099. This means that any kind of closing, any closing below 4099 means a bearish engulfing. And what does it mean, the bearish engulfing? The bearish engulfing means that we can expect a heavy fall on Wednesday. And that heavy fall can trigger a bearish movement. And then in my final update on Tuesday, I mentioned this to my community members, that closing of the SP500 above 4099 but below 4124 means that there is a red candle. But this indicates that the purpose was just to cool down the technicals and nothing else. That there is a manipulation technique called as mark the close, which is used to close the stock or an index at a particular price, which simply changes the movement or trend or the meaning of everything expected. So for the people who are new to my channel and who are watching it for the very first time, when I mention or when I say they means the market movers or the market manipulators. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, we are going to discuss the agenda of this S&P 500 weekly technical analysis. And in the agenda, the first point is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture. We are going to see that what is going to happen in the next, a few weeks or, in 1 quarter. Okay, what can happen? This weekly chart means the hawk-eye view, the big picture. Okay. And then comes the second point of the agenda of this S&P 500 weekly technical analysis. And in the second point, we are going to discuss the S&P 500 support and resistance levels. I will give you the support and resistance level, just like, okay, I always do. Last week, I mentioned 4150, 4160 at max and 4035 zone. Okay, so we are expecting the movement in between these two zones, but if there comes a breach or any kind of breach for any known or unknown reasons, in that case 4185, and here it will be like 3980. Okay, otherwise it is expected to remain okay in between these two levels. So similarly, I will give you these the support and resistance levels for the coming week. Now comes the third point of the agenda of this S&P 500 weekly technical analysis. And here we are going to discuss the recession fears, and the upcoming CPI data. Recently, we have seen that after the failure of the banks, and then this we have seen that the recent data, okay, it is confirming that the economy is slowing down. All of the data, whatever is coming, it is simply confirming that the economy is slowing down. Okay, earlier the same news used to be okay, good news for the stock market, because the stock market used to think that because the economy is slowing down, this means that the Federal Reserve will not raise the interest rates, or will not raise the interest rates by heavily. But now the situation has just changed. Now the situation is opposite, because as of now the economy is at the point where it is going to break and it is going to enter into the recession. So now the stock market has acknowledged this the fact, and this thing, okay, this particular thing you are seeing here, or that this means this movement on Monday in the Dow Jones, okay, this movement on Monday, as well as these are subsequent days. So it has further confirmed that now the investors, the big ones, okay, these are market movers and all, okay, they are moving into the defensive stocks, okay, that performs better during the recession. These are defensive stocks, okay, like the pharmaceutical companies, okay, these the healthcare companies, okay, they perform better during the recession times. So they have moved, or they are switching from these are tech stocks, okay, or the other stocks to these stocks. That is why we are saying that in the last few days there was a decline, okay, or this is a downward movement in the Apple, okay, and these are tech companies, and there was these are companies like J&J, okay, and other CVS Healthcare, UNH, okay. We have seen okay, there's the upward movement, okay, in those stocks, right? So recession. So we are going to discuss this thing in very detail. Then comes the fourth point of the agenda of this S&P 500 weekly technical analysis. And here in the fourth point, we are going to discuss the S&P 500 technical analysis on the daily chart. See, this was the weekly chart. Weekly chart means the Hawkeye view. What is going to happen in in a few weeks or in 1 quarter or so. Okay. The daily chart means that what is expected to happen, or technically, okay, what we can expect, okay, in 1 week or in 2 weeks or so, okay, like up to, okay, maximum a month or 3 weeks, okay, that's it. Then comes the fifth point of the agenda of this S&P 500 weekly technical analysis. And here we are going to discuss S&P 500 probable movement from April 10th, that is Monday, to April 14th, which is Friday. So I will tell you that what we are expecting in the coming week, okay, whether the S&P 500 is going to move up or will it come down, okay, what will happen if it comes down, then or if it moves up, okay, it means what kind of movement we are expecting in the coming week. So I will explain, okay, that the probable movement in the fifth point of the agenda of this S&P 500 weekly technical analysis. And guys, there is one more thing, that this video might be a bit lengthy, which is why, okay, I have made these the sections in the video. Whichever section you want to watch, you can watch. Whichever section you want to escape, you can escape, okay, and whichever section you want to rewatch, you can rewatch. So this is just for your convenience, okay. These the sections are there in the video. So guys, before I begin with the point number 1, S&P 500 technical analysis on the weekly chart, just one last thing, and it's the disclaimer to this S&P 500 weekly technical analysis. Now guys, I'm going to begin with the first point of the agenda of this S&P 500 weekly technical analysis, and we are going to discuss the S&P 500 technical analysis on the weekly chart. Let's see what is happening on the weekly chart, what are the changes, okay, that are there on the weekly chart, and how it is going to work. So weekly chart means that the one candle represents 1 week, not 1 hour or 1 day. One candle means 1 week, okay. So when we look into the candle itself, okay, it looks like dozy. This candle looks like dozy, okay. And for those who are not aware of, or who do not know what is a dozy candle, okay. So a dozy candle is an indication of the reversal. Whenever there comes a dozy, then it indicates a reversal. If it is if a doji candle, if it forms at the top, in that case a bearish reversal. If it forms at the bottom, in that case a bullish reversal. Okay, because a doji candle represents confusion. Okay, confusion means here in this case the reversal. However, when you look into this the candle closely, then it's not a doji candle. It's not a doji candle. Okay, because the closing price was 4105 and the open price was 4102. Okay, so the closing was not equal or not approximately equal to the open price. That is why it is not a doji candle, right? So what it means, it simply means that closing of the S&P 500 on the weekly chart in between 4102 and 4109 is a kind of situation which support bullish movement in the coming week. Okay, this was in my final update to my YouTube community members on Friday. I mentioned this thing, that this is the picture. Okay, if the SP500 closes in between these two levels, then this is the kind of situation that supports the bullish movement next week. Okay, so if you have noticed that on Friday, for around 2 hours, or more than 2 hours, there was approximately no movement in the S&P 500. Okay, so why there was no movement in the S&P 500 and why they were simply keeping it above 4102? What was the purpose of keeping it above 4102 but below 4109? Okay, so you can simply look into this the hourly chart. Okay, for 2 or 3 hours it was there. The movement in those 2 or 3 hours, it was in between these two levels, 4102 and 4109. Okay, so see, the reason is, if the closing would have been above the 4109, then the technical situation, that is so not the technical situation exactly, but in that case there would not be this kind of bullish support from the technical indicators. Okay, there means whatever bullish was supposed to be there, that was supposed to be normal. Okay, normal but not heavily bullish. Okay, so by closing in between 4102 and 4109, they have simply achieved the goal. The goal was that to close the candle in a manner where the technical support a bullish movement in the next week, so that the technical traders can come and they participate in the bullish movement. Okay, once again, mark the close. Okay, so this is the manipulation technique, and this is very you will see this thing, okay, happening in the entire stock market or in the stocks or in the indices very frequently. Now that we are done with the candle and we have seen that why, okay, we have seen a candle, okay, like this, and what is the purpose of, okay, this a candle. So the candle and 1 2 3 4, okay, the pattern of the candle, it is simply indicating that although it looks like a doji candle, but it is not a doji candle. Okay, rather it is supporting a bullish movement. Okay, what kind of bullish movement? It is saying that there can come a bullish movement that can hit the 4155, and again this is as per our expectation, that because we were already expecting a movement up to 4150 to 4160. In my previous S&P 500 weekly technical analysis, I have shown you the quarterly chart, the monthly chart. Okay, and on the quarterly and on the monthly chart, we have seen that why 4150 and 60 is in the picture. Okay, so technically it is there in the picture, and the purpose of this candle is to help the S&P 500 to move up to 415060. Okay, beyond that, what will happen? This is what we are going to discuss in the last point of the agenda. That is the fifth point of the agenda of this weekly S&P 500 weekly technical analysis. Okay, now let's see what the technical indicators are saying. On this, the weekly chart, okay, Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band and the lower band, and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Band, right? Then comes the moving averages, a slip. This is what I have discussed last week. Okay, a slip has formed in the weekly chart, and it is indicating that the S&P 500 is going to hold, or it will go bullish. But the bearish movement, okay, now we are not expecting that much of the bearish movement, and even if there comes a fall, then also we are expecting a reversal, a bullish reversal, because of the formation of this the slip. Anyways, now S&P 5, so there is a clear fan out in the moving averages. Secondly, S&P 500 has closed above the moving averages. This means that the S&P 500 is clearly bullish through the moving averages. Moving averages means EMA, exponential moving average. Then comes the Ichimoku cloud. Now this is interesting because as of now S&P 500 is trading inside the Ichimoku cloud. This means that the S&P 500 is clearly neutral through the Ichimoku cloud. Now there is one more interesting thing with the Ichimoku cloud, that whenever the movement of any stock or the index like S&P 500 or Dow Jones or Nasdaq or anything in the stock market is inside this the Ichimoku cloud, then that movement cannot be trusted. So last time we have seen that it was moving up and everyone was saying that it is going bullish and it will go bullish, and then we have seen a downward movement closing below the Ichimoku cloud and then a fall. So that is why we never trust the movement inside the Ichimoku cloud. Once the S&P 500 is out from the Ichimoku cloud, one candle is but two candles confirms that the movement either this side or this side, then it will further confirm that where exactly the S&P 500 is heading to. Then we can trust that kind of movement. So as of now, this is the picture, and now let's see what other technical indicators are saying. So if you look into this, the MACD is bullish because MACD is more than the signal. That is why this the MACD is bullish, right? Then comes the stochastic RSI. K channel is more than the D channel, and this means that the stochastic RSI is also bullish, and all other technical indicators like saturation, volatility, and these things are normal. This means that overall we will say that the S&P 500 is 80% bullish. 80% bullish, but it is in the short term bullish trend. Short-term bullish trend. It is not in the long-term bullish trend. It is in the short-term bullish trend. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these the daily updates of the S&P 500, daily analysis of the S&P 500 from Monday through Friday, then you can join my YouTube community. And it's not just about the daily update, but it's about the stock market opportunities as well. I give minimum 5 to 10 opportunities every week, minimum 5 to 10 opportunities. And recently I've also started, there's a service through which I help my YouTube community members who are stuck in, any kind of trade and who need help, on their particular trade setups. Now guys, let's move on to this, the second point of the agenda of this S&P 500 weekly technical analysis, and there we are going to discuss the support and resistance levels for this the S&P 500 for the coming week. Guys, now we are here, and this is the second point of the agenda of this S&P 500 weekly technical analysis, and here we are going to talk about the support and resistance levels for the S&P 500. So the very first thing that you are going to notice is that the closing of the S&P 500 was at 4105. And as we know that 4100 and 4100 and 4110 and 4110. So these are the two strong support as well as resistance levels. As of now, S&P 500 has closed in between these the two levels, means it is in the holding position. It is simply holding, right? So this means that as of now we can anticipate that 4150 to 4160. I have as of now I have used this the median 4155. So the as of now the immediate resistance for the S&P 500 will be 4155. 4155. This is the very first point. That is going to act as a very strong resistance where we can expect this a reversal, a brief or a small reversal, in the S&P 500. Even if the S&P 500 is able to breach 4155 or 4160, then also the next day it is expected to retest, and then means if it breaches like this, then the next day it will retest, and then it will intraday, or the next day it can move up, something like this, because this is very strong resistance. Then the next resistance comes at 4185 or 4195. So I have used the median at 4190. Okay. So this the 4190. Okay, this is the median. So if it is able to breach the 4155 and is able to close, see, it is not about the breach, it's about the closing. And if it is able to close above 4155, then comes the 4190. Okay. Thereafter, after 4190, we have 4237. Okay, 4237. And then we have 4291. Okay, and a little, okay, just a little above. Okay, we have 4305, I guess. 4305. Okay, however, we will count this the 4291. Okay, see, as of now, in the previous S&P 500 weekly technical analysis, what we have seen is that 4291 and 4305 approximately, this is the 61.8% of the Fibonacci retracement level. Okay, this means that in order to go bullish or to go long term bullish, the S&P 500 must beat 4291 and 4305, two candles. Okay, when I say two candles, I'm looking for the weekly candles. Okay, sorry, not the weekly candles, I guess these are monthly candles. Okay, so remember, we are looking for the monthly closings. 2 months consecutive closings above 4305 will confirm a long term bullish trend against all of the data, against all of these the technicals. Okay, and whatever the situation, recession situation is there, so we need 2 months, 2 minimum months, 2 consecutive months, okay, back to back closing above, okay, 4305. Then only we will say that it is now going to enter into the long term bullish trend. This means that in the first point of the agenda of this S&P 500 weekly technical analysis, on the weekly chart we have seen that it is 4155, and the weekly closing above 4155, two consecutive closings, okay, will confirm a long term bullish trend. So no, that will not confirm a long term bullish trend, rather two monthly, okay, two monthly closings above 4305 will confirm the long term bullish trend. The S&P 500, sorry, not the S&P 500, but the CPI data. Okay, CPI data, which is scheduled to be published on this April 12th. Okay, if the CPI data comes, okay, bearish, means if there comes further decline in the inflation, okay, that can trigger this the bullish movement. Okay, and that can say that yes, now from 12th of April until May 2nd, okay, there is a kind of vacuum where we can expect the bullish trend in the entire stock market. Okay, because this is the earnings season. In the month of April, companies are posting the earnings, and between the CPI and this the May 2nd FOMC, okay, there is nothing as such scheduled. Okay, no press conference of the Federal Reserve Chairman. Okay, this means that there is a kind of vacuum that can give a bullish movement to the stock market. So this is the picture. Anyways, so these are the resistance levels, right? Now let's talk about the support levels. Support levels as of now, the immediate support level is the 4100 and 4110, 4100 and 4110. Okay, these are the immediate support levels for the S&P 500. Then comes the 4065. Okay, recently we have seen that it tried to come to 4065. Okay, found some good support, and then this the intraday reversal. Then comes the very strong support at 4035 zone. This is the 4035 zone, very strong support zone. Okay, any downward movement will be handled by the 4035 zone at least for a day or two. Okay, then comes the next support zone. Okay, it is at 3991. 3991. 3991 is the next. This is the support zone. Okay. Then comes 3960. Again, this is the 3960. Okay, a good support. And then 3937. 3937. Okay, see, we have Monday, Tuesday, Wednesday, Thursday, Friday. Okay, as of now, we are anticipating that the S&P 500 will be able to hold and will be able to give bullish movements on Monday and Tuesday. Okay, then Wednesday, the CPI data will be published. Okay, whatever bearish movement is expected to come or can come. It can come Wednesday onwards only, provided that there is a bullish reversal in the inflation, right? Now, if that happens, in that case, by the time, Wednesday, okay, I'm expecting the S&P 500 to hit 4155, okay, by Wednesday. Means before Wednesday, because at 8:30 a.m. Eastern time, okay, US on Wednesday, the CPI data will be published, okay. So I'm expecting that by Tuesday, okay, S&P 500 has good chances to move up and to hit 4155, okay, 4150 to 4160. This means that if there comes a fall from 4155, then from here we can calculate the fall and we can say that up to 5%. Okay, yep. So that is more than sufficient. Okay, this means that Monday, Tuesday, by Wednesday, a fall up to 39880 approximately. Okay, that will be there. So this means that if everything goes well, in that case we can expect, okay, a movement at the bullish side, okay, maximum up to 4190, and in the bearish side we can expect to 3960, okay, or 3937. Okay, this is the movement. But if there comes a situation, okay, where the CPI data is where the CPI gives a bullish reversal or a heavy bullish reversal, then a fall to 3937 or so. And if the CPI data, okay, if it says that the inflation has further cooled down, in that case, upward movement to 4237 or so. Okay, so this will be there in the picture. And once again, remember the purpose of giving these two bearish candles. Okay, it was just to cool down the technical indicators, so that some additional room can be created for the bullish movement without saturating the technicals. Okay, and this is not the first time, okay, they are doing this, but this happened. So guys, there is one more important information that I want to share with you, and this is regarding how you can join my YouTube community in order to get the daily updates and daily analysis of the S&P 500. And also the stock market opportunities, minimum 5 to 10 opportunities every week. And other than that, if you need any help, okay, with your trade setup, if you are stuck somewhere, okay, then recently I've opened this, okay, this is the service, so you can just ask your questions, okay, and then I'll try to help you in your trades, okay, wherever you are stuck, or if you need more information how to book the profits, okay, on a particular trade, etc. Okay, so this is there. So in order to join my YouTube community, I have given the link in the description of the video and also in the comment section. So through those links, you need to visit my YouTube channel, and on this my YouTube channel, you will see this the join button, JOIN, join button. So once you click on this the join button, then you will see that there are these the two options: daily S&P 500 updates and the updates and opportunities. So daily S&P 500 updates means that you will get the daily updates and the daily analysis of the S&P 500 from Monday through Friday, each and everything, before the open of the stock market and before the closing of the stock market. Now comes the updates and opportunities. So updates and opportunities means that you will get the daily S&P 500 updates and analysis as usual from Monday through Friday. Plus, you will get the stock market opportunities, minimum 5 to 10 opportunities in the premium stocks every week, minimum 5 to 10 every week. So in a month, you can say that you will be getting around 30 to 50 opportunities within a month, 30 to 50 opportunities in the premium stocks. And guys, if you notice that many people have joined my YouTube community for last many months, and it's going to be about 1 year since they have joined my YouTube community, and they're getting the daily S&P 500 updates from Monday through Friday, each and everything, as well as the stock market opportunities, minimum 5 to 10 opportunities every week. So whenever you want to join my YouTube community, you can use the links that I've given in the description of the video and also in the comment section, and you are welcome. And guys, there is just one last thing, that once you have joined my YouTube community, then you need to visit my channel page and use the community tab. This is the community tab. All of the updates will be there in the community tab of my YouTube channel. And if you are using the YouTube mobile app, then you will get the notifications as well as the updates through your YouTube mobile app. Now guys, we are going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And in this, the third point of the agenda, we are going to discuss the recession, the CPI data, okay, inflation, and all of these the external factors. Okay. So, a few things that you must understand, okay, and that you must be aware of, okay. The very first thing is that the JP Morgan Bank CEO, he has said recently that the banking sector crisis are not yet over. Means we can expect some more crisis in the banking sector in the near future. Okay. So this was from the JP Morgan Bank CEO. Okay, he has said this thing. Then the second thing is that the OPEC plus means the oil producing some say cartel, okay, and some say group. So these the oil producing nations, okay, they have decided to reduce this the oil production, okay, by 500,000 barrels per day, 0.5 million barrels per day, okay. As such, the number is not that high, okay, or heavy, but still it is enough to impact on to make some good impact on the global economy. Okay, now because this is going to increase the fuel prices, okay, the oil prices, and as of now, this the oil, okay, it is trading at around 84 or 85. It is expected to hit $100 or $110, okay, per barrel, okay, very soon. And this increase in the oil prices is going to help the inflation to go bullish. This means that the transportation cost will increase. Okay. And now because the transportation cost will increase, this means that whatever the prices, okay, are there okay, whether it's the food, okay, or any kind of other essential commodity, okay, the prices will also increase. Okay. This means that this will simply help the inflation to move up. Okay, simple, because inflation is calculated based on, okay, these are prices from different sectors. Once there comes an increase in the prices, okay, then definitely that will help the inflation to go bullish. As simple as that. Okay. So the impact of this, the OPEC plus, okay, this is simply going to make the situation worse, because what will happen that this there's the increase in the prices. Increase in the prices means the inflation is going to move up. Now the Feds, even if the Feds want to stop these rate hikes, okay, or want to pause the rate hikes, they cannot, because they are because they are determined to bring the inflation down. But because of this, the 0.5 million, okay, this reduction, okay, in this the oil output, okay, the inflation will move up, and that will force the Feds to keep on raising the interest rates. Okay, so this was the second news. Now comes the third factor. The third factor is that recently we have seen that back to back, okay, there was this the data, economic data from all sectors is indicating that the economy is slowing down. Economy is slowing down. Okay. And this was something that the Feds have already mentioned, okay, last year, that the economy will slow down. Okay. And the economy will slow down to a level where the growth will be, below the average levels, means recession. Okay. Kind of recession, you can say. So now this the slowdown in the economy, back to back the data. Okay, so this has now compelled, okay, or now has forced these market movers, the big players, to think about the recession. Okay, so now there are these recession fears. So the recession was there in the picture, okay, since the end of, sorry, not the end, but since the beginning of the 2022. Okay, but now it is now we can see, okay, that now people, okay, they are acknowledging, and even these the hedge fund managers, okay, or the CEO of the banks, even they are acknowledging, okay, this is the fact that now the recession is inevitable. Recession is coming. Okay, now it all depends that when exactly it is going to hit the recession. Okay. So now, so what they are doing, these are big players, okay, they are simply migrating, or not exactly migrating, but they are simply transferring the money from the growth stocks to the sustainable stocks. Okay, growth stock means the tech companies, okay, like Microsoft, Apple, okay, Amazon, okay, and like Tesla, okay, or some other, okay, these the companies, okay, that used to give some good returns. Okay, So they are migrating their money to the defensive stocks. Defensive stock means the pharmaceutical, okay, healthcare, okay, or some other sectors, okay, that used to perform okay well during the recession times. Okay, that is why we are seeing that the Dow Jones is holding. Because the Dow Jones is holding, it is supporting the S&P 500 to hold, even though we have seen decline in the Apple, Microsoft, okay, or these are tech stocks, but it's still because of the Dow Jones, the S&P 500 is able to hold. Now let's talk about the CPI. Okay, because CPI is the only thing that can spoil the mood of the market. Okay. Now, so what is with the CPI? Okay, if you look into this, the picture, the only technical indicator. Okay, as of now, everything okay looks like looks like it is either holding or is bearish. Okay, but there is a problem, and the problem is the stochastic RSI. This is the same thing I mentioned okay last month. So if you look into the stochastic RSI is 1, 2, 3, 4, 3. Okay, for last 3 months, it is trading at the absolute saturated technicals for last 3 months. Okay, before those 3 months, 1, 2, 3, 2. Okay, 2 months. So in total for last 5 months, the inflation. So the ticker is USIRYY. So for last 5 months, okay, and out of those 5 months, for last 3 months, S&P not S&P 500, but the inflation is trading at the absolute critical saturated technicals, and it is not just through the stochastic RSI, but now it can also be seen through the MACD. Okay, that it is trading at these the saturated technicals. Okay, what it means? It means that technically a bullish reversal is or must be there. Okay, we were expecting it to happen last month. So last month the CPI was 6. Okay, before that it was 6.4. So there was a decline. Okay, in this the CPI. So we were expecting okay this the bullish reversal last month, because it is trading at the saturated or these the heavily saturated technicals. This means that if we trust the technicals, or if we trust the saturation, through the technicals, then a bullish reversal is due. Okay, and now we can again anticipate that a bullish reversal in the inflation can be seen okay this month. A bullish reversal this month, okay, if it comes this month, then it will be catastrophic for the entire stock market, because a bullish reversal in the inflation, what it means? This simply means that the FOMC meeting, okay, the Federal Open Market Committee will meet on May 1st and 2nd, okay, and now they will be forced to raise the interest rates not by 50 bps, then by 25 bps. Okay, they will be forced to raise the interest rates because they are trying to bring the inflation down, but now inflation is showing the sign of this is the bullish reversal. So this means that they will be forced or they will be compelled to go for the 25 bps. Okay, once again, whatever I'm telling you here, it's all through the technical indicators only. Okay, I'm not anticipating and I'm not expecting and I'm not speculating. Okay, it is everything is open and it is in front of you. Okay, so there is this and see, if you think that the saturation, okay, it is not as such necessary, then you can see here in this case, in the case of the Dow Jones, okay, why the Dow Jones was forced, okay, why it was forced to give okay a reversal on Tuesday. It was forced because it was trading okay at these the critical technicals, at these the saturated technicals. That is why it was compelled, it was forced to give a bearish reversal, right? And the same has happened, and we have seen okay in case of this the S&P 500, right? So because the indices themselves, S&P 500, Dow Jones, okay, they are also respecting okay these are critical technicals. This means that the inflation will also respect the technicals. Okay, it means it is expected to respect the technicals, right? So In this month we are anticipating this bullish reversal in the inflation, okay, but if it delays for some reason that we do not know, for some reason, okay, if the inflation further comes down this month, okay, then see the more not the more, okay, exactly, but uh, the delay that is there in this the bullish reversal, okay, this is actually creating what we say, a perfect a perfect storm, a perfect storm, okay, for in this the stock market. What kind of storm? A perfect storm, okay, because if the inflation fails to give a bullish reversal, okay, it has already failed, okay, once or twice. If it fails to give a bullish reversal this month, okay, then it will be further trading at these the saturated, further means super saturated, super critical. It is already, okay, at the super critical technicals. This means that whenever, okay, I repeat that whenever there comes a bullish reversal in the inflation, this bullish reversal will be very heavy. Remember, this bullish reversal will be very heavy. Okay, and this very heavy bullish reversal, it will simply negate whatever was the downward movement in the inflation for last 1, 2, or 3 months, and you can think of it like an engulfing, a bullish engulfing. Okay, so when there will be a very heavy bullish reversal in the inflation, okay, and this also seems logical because now the OPEC plus has decided to cut this this the oil production by 500,000 barrels, okay, per day, okay. So this means that soon, okay, the prices are going to increase because the transportation cost will increase, okay. So a very heavy reversal in the inflation means that it will mark the beginning of the recession. Okay. So this a very heavy reversal means that immediately you will see that now the entire stock market has entered into the recession. It will mark the beginning of the recession. So the rate hikes. Okay, why the rate hikes is actually creating this recession. Okay, this kind of situation. Okay. So on May 1st and 2nd, the FOMC will meet, okay, and they will discuss, okay, this the next, okay, the increase in the interest rates, okay, the rate. Even a 25 BPS rate hike, even a 25 BPS rate hike has the potential to break this the financial system, okay, or to this the market, this the financial markets, okay, because already the banks, okay, see, it is primarily the banks. Banks are already sitting at, okay, this the junction of, okay, means this is the breaking point. So we will see that some more banks, okay, they are under this the stress, means stress in the financial system, okay, and that will then result, okay, in this the bearish movement in the entire stock market, right? Secondly, this the 25 BPS rate hike, okay, it will further push the entire economy towards recession. Okay, just one more step towards this the recession. Okay, see, recession, people have means the big ones have already accepted this the fact recession, but it will simply accelerate the process of this the recession. Okay, so even at 25 bps rate hike, as of now 50 bps is not in the picture. 50 bps is not in the picture. 50 bps will be in the picture only and only if there comes an unexpected scenario where the inflation gives a bullish reversal, a heavy bullish reversal like 20-25% bullish reversal, and the situation demands a 50 bps rate hike in order to curb this the bullish movement in the inflation. So if you have subscribed to my YouTube channel for last many months, okay, then you have noticed this thing, okay, that if you notice the moving averages, right? So there is a clear fan out in the moving averages that is supporting the bullish trend, not the bear trend, bullish trend. Okay. Now there is a closing of this the inflation below these the moving averages, right? This closing below the moving averages is not or cannot be trusted. Okay, because there is no crossover in the moving averages. This means that even though we are seeing a close below these the moving averages, this does not guarantee that the inflation is going to come down. Okay, and even if it comes down, then we need to see that to what level it is going to come. So what we have seen generally, what we have seen that when the moving averages, okay, they are in this the bullish fan out, okay, and if there comes a closing below the moving averages, then maybe like 1 or 2, and that's it, and then there will be a bullish reversal. Okay, this is a pattern. This is the kind of pattern that we can see in every stock or in every index. Okay, and this usually happens that the moving averages are in the bullish, this the fan out, and then one closing, okay, or two closing, when the people or the technical traders, even the technical traders are convinced that okay, that it is bearish, but it is not. It gives a bullish reversal, right? So this means that as of now it cannot be trusted, and we can see or we can expect a bullish reversal. Now technically a bullish reversal to what level? Technically as of now the bullish reversal is up to 7, up to 7. Okay, as of now it is 6, so we can expect a bullish reversal from 6 to 7 there. So this is technically possible. This is technically possible. Okay, I'm not speculating, but this is technically possible. Okay, so it will be 7 or 7.10 approximately. Okay, a reversal to 7.71, 7.10. Okay, it is technically possible. Okay, so as of now the inflation is trading at the saturated technicals, at the very critical technicals. Okay, if there comes a reversal in this month, that is good, and that will help the entire stock market to come down, to enter into the recession. Okay, fine. If there comes no reversal, okay, in this month, but technically it should come a reversal. But if there comes no there's a bullish reversal in this month, rather there comes, okay, a kind of hold. Okay, if the inflation holds, in that case we can anticipate that the reversal may come, okay, next month. But again, the more time it takes to give a bullish reversal, the situation, okay, it is simply making the situation more worse. Okay, not so earlier the situation was bad, okay, when the inflation, okay, when the technicals were here, okay, then it become worse. Okay, as of now it is worse, but if it takes more time, then the situation will become worse, because in that case the inflation will be forced to give very heavy reversal, okay, and 20% we can expect, 15, 20%, 25% in one go, in 1 month we can expect. Okay, that is technically possible. Okay, so remember this thing. This means that either we can expect that the recession is going to commence from this month itself, not exactly from this month, because this is the earning season, and Feds will raise the interest rates on May 2nd. Okay, so from May 2nd onwards. If not, then we can expect the recession to come from the next this is the CPI data that will be published in the month of May, okay, mid of May, and then the next FOMC meet. Okay, during that time, means May, June, we can say that we can expect that it will be the beginning of the recession, and whatever bullish movement you are seeing in the stock market, this we can expect now we can expect that this is the final bullish movement, and thereafter, okay, the recession will take over and the things will come down. Okay, so we can expect that May or June 2023. Okay, this will mark, and June, yeah. So June, it will be the there will be the expiry. Okay, the second quarter 2 expiry. Okay, in the month of June. So we can say, yeah, something like in the month of June, we can say that it will mark as the beginning of the recession. Okay, and whatever bullish movement you are seeing, this is the final and the last bullish movement before the recession. And this further confirms that this illogical and manipulated bullish movement we have seen. Okay, this was clearly 100% manipulated movement that we have seen. This was pre-planned, this was well planned, because they knew that this kind of situation is expected to be there. That is why, okay, an illogical rally just before the recession. Okay, and this is what we have seen almost every time just before the recession or the correction. There comes an illogical rally, a manipulated movement that actually changes the trend, okay, and everything, and then there will be a bullish movement. Then finally, okay, at some point, or there will be a peak, okay, and then the entire stock market, okay, it will simply collapse or it will simply come down. Okay, that will be the beginning of the recession. So you must remember that whatever you are seeing, it is the short-term bullish trend. Okay, that may be there for 1-2 weeks, for a month or so. Okay, and then there will be a reversal. So this the short-term bullish trend is going to help you to short your trades. Okay, hits once it hit the levels. Okay, as of now 4155 in the S&P 500. Then we have okay, so anything from 4155 to 4300. Okay, so this is a big zone. Okay, otherwise 4291 itself. Okay, this is the 61.8% of the Fibonacci retracement, and that will be a perfect time. Okay, where see 4291 will come into the picture only if the CPI data, only if the inflation supports, if the inflation comes down even a little, or if there comes a holding pattern. Okay, then also S&P 500 has the chances to move up. Okay, and it has to cover the 4291. Okay, and these levels before the FOMC meet. Okay, before the FOMC meets. So before May 1st and 2nd, it has to cover, or it has to reach to the levels wherever it want to be before the FOMC meet, because after the FOMC meet, then it will begin. Okay, it's the downward movement, and this all will be clear. Okay, on Wednesday, when the CPI data will be out. Okay, when the CPI data will be published, because the CPI data will then set the course of the entire stock market. So if you are my YouTube community member, okay, then on Wednesday, once the CPI data is out, okay, then I will explain, okay, in very detail, I will explain that how it is going to impact the entire movement and what you should do. Okay, bearish or bullish. Okay, and accordingly, you should plan your short-term and the long-term trades. Okay. So this was with the recession, inflation, CPI, etc. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these the daily updates and analysis of the S&P 500, as well as these the minimum 5 to 10 opportunities or 30 to 50 opportunities in the premium stocks, okay, every month, then you can join my YouTube community, and I've given the link in the description of the video and also in the comment section. Now guys, let's move on to the fourth point of the agenda of this S&P 500 weekly technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Let's see, okay, what the technicals are saying on the daily chart. Now guys, we are going to discuss the fourth point of the agenda of this S&P 500 weekly technical analysis. And in this, the fourth point of the agenda, we are going to talk about this S&P 500 analysis on the daily chart. Okay, let's see what the technical indicators are saying about this the S&P 500 on the daily chart. So at first we are going to discuss the candle. If you look into the candle, then the closing of the candle was above the previous high. Okay, previous high was approximately 4,100, and this was 105. Okay. And secondly, the open was above the low of the previous candle. Okay, so we cannot say that it is a bullish engulfing candle. Okay, some might say that it is partial engulfing. Okay, or bullish engulfing, partial bullish engulfing. However, many of the technical traders, they are going to see it as a bullish engulfing candle. And because they are going to see it as a bullish engulfing candle, what does that mean? This means that now on Monday, they are expected to go bullish. On Monday, they are expected to go bullish. Okay. Secondly, the kind of candle this is, okay, and the bullish candle where the close was approximately the high. Okay. This is so this candle itself, okay, is again giving some kind of these are bullish sentiments. Okay. So it seems logical that on Monday, okay, if there comes a flat open or a bullish open, so that will be normal. Okay, not a big deal. Okay. Now let's see what the technical indicators are saying. First comes the Bollinger Band. This is the upper band of the Bollinger Bands. Then this is the median of the Bollinger Band. Because the S&P 500 on the daily chart is trading in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the daily chart. Now comes the moving averages. Clear fan out in the moving averages, bullish, and the closing of the S&P 500 is above the moving averages, means the S&P 500 is clearly bullish through the moving averages. Okay. Then comes the Ichimoku cloud. Because the S&P 500 is able to close above the Ichimoku cloud, this means that the S&P 500 is clearly bullish through the Ichimoku cloud, right? Now let's see what other technical indicators are saying. So MACD, because the MACD is more than the signal. This means that the S&P 500 is bullish through the MACD, right? Stochastic RSI, okay, yes, a little change in the stochastic RSI. K channel is less than the D channel. This means that the stochastic RSI is bearish. Okay. If there comes one more bullish candle, one more green candle, good green candle, good bullish candle, then the stochastic RSI is expected to change from bearish to bullish. Okay. And all of the technical indicators so far, okay, are good. This means that we can say that the S&P 500 is bullish. S&P 500 is bullish. Okay, it is not absolute bullish because the stochastic RSI is not supporting. Okay, this is the bullish trend. This means we can say that 80 to 90% S&P 500 is bullish. Okay, as soon as a stochastic RSI is also aligned bullish, then both the MACD and the stochastic RSI will be aligned bullish. Means there will be a bullish support from these two technical indicators to the entire stock market. Okay, so as of now, this is 80 to 90% bullish. So guys, once again, if you have not yet subscribed to the channel, then please subscribe to the channel. And also, if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. Now guys, let's move on to the fifth point of the agenda of this S&P 500 weekly technical analysis. And in this, the fifth point or last point of the agenda, we are going to discuss the probable movement of the S&P 500 in the coming week. Let's see how the S&P 500 is expected to move in the coming week, whether it will hold, it will continue to hold, okay, and will create a consolidation, okay, this kind of situation, or it will simply resume its short-term bullish trend, okay, and these things. Now guys, we are here and this is the fifth and the last point of the agenda of this S&P 500 weekly technical analysis. And we are going to discuss the probable movement of the S&P 500, okay. So a few things that you must remember and you must consider. Okay, number one, that because of the OPEC plus, okay, because they have decided to reduce the production of the oil by 0.5 million barrels per day, not per month, but per day. Okay, so this is going to impact the global economy. Okay, means in terms of the inflation, this is simply going to push the prices higher. Okay, so the prices will move up, and this is the biggest thing here. Okay, number two, that recession thing is there. Okay, now the big ones, the giants, the big ones, they have also accepted and acknowledged the recession thing. Okay, this means that whatever short-term bullish trend you are seeing here, it is the short-term bullish trend, and you should be ready to tackle any kind of the situation. For example, the very first thing, okay, this a sudden downward movement that can come in the stock market, that will be Wednesday, means 12th of April, because on 12th of April the CPI data will be published, and if there comes any kind of bullishness in the CPI data, even 0.1% bullishness in the CPI data, then also it will trigger bearish sentiments, okay, bearish reaction to the entire stock market. This means that even though the S&P 500 and the entire stock market is in the short-term bullish trend, but you should cover your trades on Tuesday. Okay, at the time of closing, you must cover your trades properly, because on Wednesday at 8:30 a.m. Eastern time, okay, Eastern time, US, the data will be published, and the stock market opens at 9:30 a.m. Okay, this means the stock market will give the movements even before the open, okay, during the pre-market, okay, session. So you must cover your trade properly, okay, by the time, okay, the stock market closes on Tuesday. And the next part is that we are anticipating an upward movement to 4155, 4150, 4160. So why this the 4150, 4155, 4160? Okay, this is because of the movement of the S&P 500, okay, or the level of the S&P 500 on the monthly chart and on the quarterly chart. So that is why the 4155, okay, it is there in the picture, and it is most likely, okay, it is there, and we can expect that the S&P 500 will be able to hit the 4155, okay, by Tuesday, by this Tuesday. The reason is that after Tuesday, means from Wednesday onwards, the CPI will the CPI factor will be there in the entire stock market. This means that Now the stock market, this is the S&P 500, and the market manipulators have only 2 days, okay, to push the S&P 500 up to 4155 and even beyond if they want to. Okay, otherwise, if the CPI data comes more than expected, okay, on Wednesday, then the S&P 500 will not be able to, to breach, and it will not be able to hit. Okay, so only 2 days, Monday and Tuesday, only 2 days are there to see. Okay, there's the movement towards 4155, and even if there comes very heavy bullish push, then to 4185 or 4190. Okay, so this will be like from 2% movement, okay, in 2 days, or 1%, 2%. This is we can expect, okay, in the entire stock market, right? And then from Wednesday onwards, okay, the CPI data, okay, this thing will simply take over, okay, the sentiments, emotion, the movement, etc. And if you are my YouTube community member, okay, then I will discuss in detail, okay, before the open of the stock market in my pre-market update, that what you can now expect, okay, and how the stock market is expected to move and behave. Okay, so these are the things, okay, that you must remember. Now let's see, okay, this is a probable movement. Okay, guys, so there was, one more thing, okay, that I forgot to mention earlier, okay, that I have launched this the website, okay. The name is the Trading SP500, and I've given the link in the description and also in the comment section. Okay, so it contains, some good information, and I'm going to so there are the services that I offer, and other than that, okay, the blogs are there, okay, and I'm going to write the blogs, and I'm going to publish more blogs, means more information on the entire stock market. So the link to the website is in the description and also in the comment section. Okay, so you can check it out and you can read the blogs for the information and more information. Okay, I'm going to publish more and more information. Okay, anyways, yeah. So now, because of this, the candle, okay, that is there, and because of the weekly candle we have seen, okay, it is not actually a doji candle. Okay, it is a bullish candle supporting the bullish movement in the stock market. This means that on Monday we can expect, some bullishness, okay, in the stock market. The only thing that can like prevent or that cannot support, okay, or that can simply restrict this the bullish movement on in the stock market in the S&P 500 on Monday will be the non-farm payroll data that was published on Friday. Okay, Friday was the holiday, okay, but it was published on Friday, and the non-farm payroll data, it is significantly, okay, down from the previous, okay, these are the levels. So last month it was 340,000, I guess. Okay, this month it is 240,000. Okay, so it is significantly down. Secondly, the Wall Street was expecting somewhere around like 270,000 or 290,000 or something. Okay, but the data, okay, it is even below the, okay, this what the Wall Street was anticipating. Okay, what it means, this means that whatever data is coming out, okay, it is supporting this a slowdown in the economy. It is simply saying that the economy is slowing down. Okay, and there was one more factor. Okay, recently we have seen the trade deficit. That the trade deficit, okay, means the imports were more than the export. Okay, it has increased to 70 or 71 billion dollars, the trade deficit. Okay, so that is again not a good sign. Okay, so overall the economy is slowing down. So this means that as of now, okay, the bullish trend, okay, bullish movement that we are anticipating, okay, it is expected to be limited to 4150 or 4160, or the median is 4155. Okay, so when the S&P 500 gives, means on Monday, irrespective of any kind of open, okay, we can expect that sooner or later, okay, S&P 500 is expected to give a bullish movement. Bullish movement to what? Bullish movement to what? Bullish movement to 4155, because as of now, as such, between this level 4105 and 4155, okay, we can say that it is a kind of vacuum, you can see, okay, kind of vacuum. So it means the movement is as such not going to face any kind of strong resistance, okay, until and unless there is some news. Okay, otherwise technically, okay, there is no strong resistance that we can anticipate or that we are anticipating here. Okay, so this means that a movement to 4155 is fairly, okay, possible, fairly possible. So this the movement up to 4155. Okay, it was there in the picture because of the weekly chart, because of the monthly chart, and because of the quarterly chart. Okay. Now the picture is going to change. Okay, after 4155. 4155 is fine, not a problem. But after 4155 up to 4291 or 4300, this is the 150 points. This is where the picture is going to change. Okay, this is the zone. Okay, this is the zone where we can anticipate that the final lower high is going to be formed. Final lower high is going to be formed. Okay, in the zone of 4155 to 4300. Okay, roughly, or 4150 to 4300. Okay, this is where the final lower high is going to be formed, and that will be the final. This is the final upward movement, and then the recession will be there in the picture, and then the entire stock market will align itself to the recession. Okay, so as of now 4155 is there. Now in the coming week, okay, as we are talking about this the coming week, this means that from 4105 to 4155, this is approximately 1% movement, 1 or 1.10% movement. Okay, and this is fairly simple. Within a day, this is fairly okay, this is fairly possible. Okay, now remember that they have only Monday and Tuesday, okay, to push the S&P 500 and the entire stock market. Okay, in this the bullish side. Okay, because Wednesday, as of now, we do not know. Okay, and I'm anticipating that as of now, no one knows other than the Feds. Okay, who actually calculate and publish the CPI data, that what will be the actual CPI number. Okay, what will be the actual number? Okay, last time it was 6% last month. This month, okay, we do not know. This the bullish movement. Okay, as per the historical. Okay, this is the movement. Okay, so what we know is that if the market manipulators, if the market movers, if they are also not aware about this, the CPI data, if they do not have any insider information on the CPI data, then they will also go for this the bullish movement on Monday and Tuesday. Okay, because they do not want to take any kind of these the chances. This means that 4155 and a maximum up to 4185 4190 will be there in the picture. Means 1% to 2% movement will be there in the picture by Tuesday. Okay, so Tuesday will be what? Tuesday will be 11th of April. Okay, so this will be there in the picture. Now if they have okay, see, sometimes they have this the insider information. If they have this insider information, okay, that the CPI data, okay, or the expected CPI is going to it is going to come down. In that case only they can they can keep the S&P 500 here. Okay, or they can or they will not push the S&P 500 higher to 4155 to 41 this the 85. Rather they will keep the S&P 500 and the Dow Jones, okay, and everything in the holding position. Okay, rather than giving any kind of movement. And also they can even opt for a bearish movement in the meantime to retest these the moving averages or the 4035. Okay, not actually the 4035, but they can go for, okay, there's the retesting of 4065 or 4055, etc. Okay, so that will be the case only and only when if they have some kind of insider information that on Wednesday the CPI data is further, okay, means it is indicating that the inflation is going to be or the data will be less than 6%. Okay, it can be anything but less than 6%. So why they will go for this the hold or this the downward movement? The reason is that because they have this kind of information. So pre-market Wednesday, okay, they will push the S&P 500 and the entire stock market to these the levels. For example, you will notice that there is a gap up open of like 1%. Okay, 2%, approximately 1 to 2% gap up open on Wednesday, because the CPI, okay, the inflation has come down. Okay, and then you will see that, okay, they knew that this kind of information, means they had there's some kind of information because of which, okay, they they put the market, okay, in the holding situation or in a little bearish situation. Okay, so that is okay, that is the another aspect, okay, of this the movement. Now some of you might think that if the market manipulators are going to give a bullish movement like 1 to 2% movement on Monday and Tuesday, then this means that on Wednesday they know that the inflation is going to come down. Not exactly. Okay, sometimes it happens and sometimes it doesn't. Okay, so this does not mean that they have the insider information and they are the insider information is that the insider information is going to say that the inflation is going to move up. Okay, they might or might not have this the information. Okay, but because they have pushed this the entire stock market up, and if there comes this kind of situation that the inflation drops further from 6%, anything below 6%, okay, then on Wednesday also you will see an upward movement, but in that case that upward movement will be like 1% or 1.5% or so. Okay, because in that case there will not be very means this much of room to give 2% or 3% bullish movement. 1.5%, okay, on Wednesday it will be there, right? But if they are giving like very heavy movement like 2% or 3%, okay, by Tuesday, this means that definitely something is not right. Something is not right, and you must go defensive, or you must trade defensive by the end of Tuesday. Okay. Now the question is that if the inflation comes down, okay, anything below 6%, like 5.9% will also work, not a problem. Okay, 5.8%, 5.7%, anything below 6% will work. Okay, in that case, okay, what can happen to the entire stock market? In that case, we can anticipate that the S&P 500, okay, 4155 will be there in the picture, fine. 4185, 4190 will be there in the picture, and also 4237 will also be in the picture. Okay, and if there comes a very heavy movement, okay, see, although I am technically I'm not anticipating a heavy movement to 4300, okay, in the coming week, because as soon as it clears the 4000, 4180, 4190, okay, the stochastic RSI will again become saturated. So there is a room for the bullish movement, but this does not mean, or there is means the bullish room is not that much that you can see that it is going to push the S&P 500 to the absolute, these are the limits now. Okay, room, but it is limited, like 100 points, okay, or not exactly 100 points, but 70 points, 220 points or something. Okay, so that is the room. So 4190. So when it starts moving above 4190, then the technicals will start then the technicals will saturate. Okay, and in order to get a better idea that how the technicals are going to saturate, okay, when you look into this Dow Jones, okay, in the Dow Jones you can notice that the stochastic RSI is still at the levels, the levels, okay, that are not giving enough room to the Dow Jones. This means that the upward movement that we are anticipating in the coming week, okay, even in the favorable scenario, means when the CPI data is less than 6%, in that case 4237, okay, we can expect, okay, at most to 4235, 4237, okay, because by the time, okay, it hits to 4235, okay, or so, the technicals will saturate, and in that case the S&P 500 will be forced, it will be compelled to give a bearish movement, okay, for 1, 2, or something like this, okay, 2 days or something. Okay, so this means that by the time, okay, it reaches or it reached to this level 4200, 4190, okay, the technicals will saturate, and also it will be almost like Thursday or Friday. Okay, so this means that in the coming week 4237, okay, without saturating the technicals, 4235, 4237, provided that there comes a bullish movement back to back, and provided that the CPI data is supporting the bullish movement, right? Now the second scenario where the CPI data, okay, is more than 6%, or is 6% equal to 6% or more than 6%, okay, in that case the upward movement is expected to be limited to at first 4155, then to 4190. Because the S&P 500 is in the short-term bull trend, okay, that is why this is possible, 4155 and 4190, okay, that is possible. Okay, but remember that whatever bullish movement we are expecting, this bullish movement must come before the CPI data is published, right? If the CPI data is non-favorable, if it is not favorable, if it is more than 6%, okay, or is approximately 6%, in that case the S&P 500 will have to come down, okay, on Wednesday or on Thursday, okay, and then after coming down it will retest the moving averages, the boundary of the Ichimoku cloud, and then only, okay, it can resume its short-term bull trend. So why it is not going to resume this the bearish trend? Okay, see, it can resume its bearish trend only if the inflation is like very heavy, or inflation is giving a very heavy bullish signal. Like it is, it last month it was 6%, but this month, okay, it comes like 7%. Okay, very heavy bullish reversal. In that case, yes, in that case we can anticipate. In that case, we can anticipate this the bearish reversal. But if the inflation comes like normal, like 6.1, 6.2 or so, in that case, yes, on Wednesday and Thursday, we can anticipate a bearish reversal. But again, a resumption of the bullish trend, because as of now, technically, S&P 500 is in the short-term bullish trend, number one. Number two, that even though the inflation is more than expected, but the Feds will raise the interest rates only on May 2nd. This means that there are still 20 days, 15 to 20 days, okay, before the rate hike is announced. This means that the stock market, the market movers, the market manipulators, okay, they have still the reasons and the time to give a bullish push to the entire stock market, so that by the time, okay, there comes this beginning of the recession, okay, they have pushed the S&P 500 to the levels where it was supposed to be 61.8% of the Fibonacci retracement levels. Okay, this was all about the bullish, because I am anticipating, okay, through the technicals and through the upcoming data and through the, okay, this thing that we are anticipating, okay, this is a bullish movement. Now there are very little chances that there will be this the bearish movement. Okay, bearish movement will be there only in very few conditions. Number one, that if they know that that the CPI data or the inflation data, okay, it will be less than 6%. Okay, it will be down from 6%. If they know, in that case, on Monday and Tuesday, they can just keep it, okay, here in this the holding position, on, sorry, not just in the holding position, but they can even give a bearish movement. Okay, and so see guys, once again, do not speculate that because they are holding this the S&P 500 and the entire stock market, or they are giving the bearish movement because they know that the inflation is going to come down. No, not necessary. Do not speculate that they know. So most of the times we have seen that sometimes, okay, this happens, sometimes, okay, it doesn't. Okay, so you cannot rely that because there is this the holding pattern, or it is a downward movement, this means that 100% this will be there. No, 50-50. Okay, it may or may not. Okay, so so if there comes, okay, this kind of situation that they are selling, okay, even before, okay, this is there. See guys, why I'm saying this time, okay, it is not 50-50, but it will be 70-30. Okay, why 70-30? The reason is that they have given a bullish movement, okay, on purpose. This the manipulated bullish movement, okay, it was there, okay, on purpose. This means that if they want to sell, in that case, they have to first convince the retail traders, the technical traders, and everyone that see the entire stock market is bullish, and now it is technically bullish. So you cannot question this the upward movement. Okay, so they can keep this the bullish movement, and then after once the CPI data is published, and if it is bullish, then they can simply give, okay, or they can simply sell. Okay, so that seems more logical, that why it was there at the very first place. This is why you must know what they are planning, okay, what they have done, what they are doing. Okay, we must have some idea in order to we can understand that what can happen, okay, in the near future through the technicals as well as through the upcoming data. Okay, so that is why I'm saying 70-30, not 50-50. So if there is the bullish movement, okay, upward bullish movement, okay, this means that they have some kind of insider information. Okay, but again, I'm not 100% certain that the bullish movement, okay, on Monday and Tuesday will say, okay, it is going to come down. The inflation is going to come down now. And the same is applicable to the bearish movement. Now the question is the bearish movement. So bearish movement, okay, first the S&P 500 is going to retest around 4065 or 4055, 4065 or 4055. Okay, then comes the Ichimoku cloud in the picture. Ichimoku cloud is at 4035. Okay, this means that and also 4035 is our calculated support zone. Okay, this is the support zone, very heavy support zone. So as long as S&P 500 is trading above the zone of 4035, technically it will remain in the short-term bullish trend. Okay, technically it will remain in the short-term bullish trend as long as it is trading above the zone of 4035. Right? Once it gives up, once it closes below the zone of 4035 inside the Chimoku cloud, that will be the very first sign that now the upward movement is over, the short-term bullish movement is over, and it is going to enter into or is going to resume its long-term bearish trend. Okay, so that picture is there. So the downward movement, okay, so we are anticipating a downward movement up to 3980 or 3970 to 3970. But remember that the downward movement, anything below 4035 will come only and only after on or after Wednesday, because for such kind of heavy downward movement, the entire stock market must have some kind of reason. The reason will be the inflation. If the inflation moves up, then only a movement up to 4035 or below 4035 will be there, as this kind of movement will not be there. Okay, see, under the normal circumstances, we can expect a movement up to 4090, 4065. Okay, at most 4065. That's it. Okay. So remember this thing, that Monday and Tuesday, okay, these 2 days, then Wednesday, Thursday, and Friday. Okay, Monday and Tuesday, okay, you must be very, very careful, because the picture will be very much clear only on Wednesday. Okay, in the morning of Wednesday, the picture will be very much clear. Okay, what exactly we are going to anticipate, what exactly is going to happen in the SP 500 and the entire stock market, what kind of bullish or bearish movement, okay, a very little movement or a heavy movement, okay, we are going to see, and whether we are going to see, you know, any sharp intraday reversals, okay, up, down also. It will be clear only on Wednesday and Wednesday onwards. Okay, Monday and Tuesday we are anticipating a bullish movement. Okay, as such, the stock market and the S&P 500 has no reasons to, you know, to give up. Okay, until and unless that they know that something big is going to happen, the data will be, you know, so heavy that they must take, you know, this the defensive position. Okay, and they must start selling. Okay, or they are anticipating, or they know that the data is it will be less than the anticipated. This is the CPI data, inflation will further come down, so they are simply, you know, selling, okay, a little bit, so that on Monday, okay, sorry, on not on Monday, but on Wednesday morning, okay, they can give a good gap up open 1% to 2% or so. And guys, there is one more thing. Okay, if you want to get, you know, a little more clear picture, then look into the European market. Okay, SX5E. This is the ticker of the stocks 50 index. Stocks STOXX stocks 50 index. This is the European index. Okay, what happens is that the kind of movement will be there in the stocks 50 index. Okay, European market on Tuesday. Okay, it can give you an idea. Okay, what is expected to happen on Wednesday. Okay, in the American market. Okay. So once again, if you are my YouTube community member, okay, then I will analyze, okay, this thing, and I will tell you that what is the probability, okay, and what is the certainty that we can expect, okay, gap up, gap down, open, okay, and what kind of movement, okay, on Wednesday. So Wednesday, okay, it will be the day, and it is going to decide the movement in the entire stock market, and the kind of movement and the limits, and even the limits of the S&P 500. It will be the Wednesday. Right, so Monday, Tuesday fine, and Wednesday, then Wednesday onwards, okay, this thing. So guys, if you have not yet joined my YouTube community, then you can join my YouTube community to get the daily updates and analysis of the S&P 500, and also 30 to 50 these the stock market opportunities in the premium stocks every month. Okay, 30 to 50 opportunities in the premium stocks. So guys, I have given the link in the description of the video and also in the comment section, so that you can use these links in order to join my YouTube community. And also, if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel. Okay, and hit like if you have liked this video, and if you have any questions or anything that you want to ask, then please feel free to comment, and I will try to answer your questions. Okay. So guys, this was my S&P 500 weekly technical analysis for the week of April 10th, 2023. That is from April 10th, which is Monday, to April 14th, which is Friday.